Welcome back to Dinar Community Channel. The financial landscape surrounding the Iraqi dinar has taken an electrifying turn, sending shockwaves through currency markets, private exchange circles, and the broader global economic conversation. Overnight, reports began to surface from multiple credible sources that the Iraqi dinar had surged past the $6 mark against the US dollar, an event that, if confirmed, will go down as one of the most significant currency revaluations in modern history. The whispers first emerged in tightly knit investment groups and private banking channels before quickly spilling into public chatter, igniting a wave of excitement, speculation, and urgent activity among dinar holders worldwide. The sudden spike is being framed as both a culmination of years of preparation and a surprise in its timing. For more than a decade, the IQD community has debated, analyzed, and predicted various timelines for an RV revaluation, or reinstatement of Iraq's currency, often fueled by geopolitical developments, oil revenue strategies, and economic reforms. What few expected was for the rate to leap so dramatically in one swift move, bypassing earlier projections of a gradual climb through the $3-4 range and instead vaulting into territory that positions Iraq's currency among the most valuable in the world. In the early hours of the morning, several large exchange centers and participating banks reportedly began adjusting their internal screens to reflect new IQD rates. In some cases, these rates hovered slightly above $6 per dinar, with certain regions reporting even higher contract rates for prearranged redemption groups. The initial market reaction was swift and chaotic, queues forming outside select exchange locations, private bankers fielding an avalanche of calls, and online trading platforms momentarily freezing under heavy traffic. For many holders, this was the moment they had been preparing for, the opportunity to convert their dinar holdings into life-changing sums of money. The surge appears to be the result of a confluence of factors. Economically, Iraq has been aggressively pursuing monetary reform as part of its broader modernization strategy, backed by rising oil revenues, international trade agreements, and infrastructural development. Politically, the stability achieved under Prime Minister Mohammed Shia al-Sudani's leadership has been a major confidence booster for both domestic and foreign investors. Additionally, Iraq's strengthened relationships with regional partners, coupled with its active participation in global financial forums, have made it increasingly clear that the nation intended to reassert its currency's strength on the international stage. Insiders claim that the $6+ rate is not merely a speculative figure but rather the official, operational exchange rate now active in certain banking networks. While the Central Bank of Iraq has not yet issued a public statement confirming the exact figure, multiple credible reports from both Middle Eastern and Western banking circles suggest that the change is fully implemented and in motion. Some private banking contacts have hinted that this is the international rate, meaning it is recognized and tradable beyond Iraq's borders in fully convertible markets. For ordinary dinar holders, the implications are staggering. A modest holding of 1 million dinars, purchased years ago at a fraction of a penny per unit, could now be worth over $6 million. For those with larger reserves, the potential wealth generated from this overnight shift is beyond transformative, it's generational. Yet with this sudden influx of potential wealth comes the inevitable need for careful planning, security measures, and a sober approach to managing newfound financial power. Exchange centers in the United States, Canada, Australia, and parts of Europe have reportedly begun processing early transactions, primarily for those with prearranged appointments or who are part of structured redemption groups. Public exchanges are expected to follow, though banking sources indicate that security protocols and tiered scheduling will likely be enforced to prevent system overload. This means that not every dinar holder will be able to walk into a bank today and immediately cash in at the $6+ rate. However, the infrastructure to handle widespread exchanges appears to be rapidly deploying. One of the key elements driving the spike is the apparent coordination between Iraq's monetary authorities and major global banking institutions. Over the past year, there have been numerous quiet but telling signs. Wells Fargo, JP Morgan Chase, HSBC, and other major players reportedly preparing their currency desks for IQD processing, with specialized exchange rooms outfitted to handle high-value transactions. This preparation seems to have been in anticipation of exactly this type of rate shift, ensuring that when the moment came, it could be handled with minimal disruption. Financial analysts are now scrambling to assess what this move means for global markets. A $6+ IQD rate dramatically shifts Iraq's purchasing power, potentially impacting oil contracts, trade balances, and foreign investment flows. Some believe it could trigger a domino effect in regional currency adjustments, particularly among Iraq's trading partners. Others warn that sudden currency surges can invite volatility, speculative bubbles, and political friction if not managed carefully. For Iraq, the challenge now will be to maintain stability while leveraging this newfound strength to accelerate economic growth and modernization. Security concerns have also surged alongside the excitement. Wealth advisors and financial institutions are urging IQD holders to be extremely cautious in the wake of this development. Opportunistic scammers are expected to exploit the chaos, posing as bank representatives or offering fraudulent, expedited exchange services. Dinar holders are being advised to work only with verified financial institutions, avoid sharing details about their holdings publicly, and ensure that all transactions are conducted in secure, monitored environments. On the ground in Iraq, the public reaction has been one of cautious optimism. Citizens have long hoped for a stronger dinar, particularly as inflationary pressures and the cost of imports have strained household budgets. A currency valued at over $6 per unit dramatically increases domestic purchasing power and could pave the way for a surge in economic activity, provided that the benefits are distributed equitably and the government takes steps to prevent rapid inflation in goods and services. Internationally, the move is being interpreted as a bold declaration of Iraq's re-emergence as a major economic player. The revaluation reflects not only monetary confidence but also a shift in how the nation wishes to engage with the world, no longer as a post-conflict economy in recovery, but as a sovereign, resource-rich state with a competitive, high-value currency. This transformation aligns with Iraq's stated goal of diversifying beyond oil dependency by developing sectors such as technology, manufacturing, and tourism. As with any seismic financial event, there are unanswered questions. Will the $6 plus rate hold steady, or will market forces cause it to fluctuate in the coming days? How quickly will global forex platforms update their rates to reflect the change? Will there be special, contract rates, offered to certain holders through private negotiation channels, potentially even higher than the public rate? These uncertainties add both intrigue and urgency to the unfolding situation. For many in the dinar community, this moment is vindication after years of skepticism, misinformation, and delays. The path to this point has been littered with false alarms, unverified rumors, and shifting political landscapes. But the current reports differ sharply from past speculation, carrying the weight of real banking activity and corroborated confirmations from multiple sources. The sentiment is shifting from "if" to "it's happening," and that shift in tone alone marks a historic turning point. Looking forward, the focus will inevitably move from the excitement of the exchange to the realities of managing and safeguarding wealth. Financial planners are already preparing tailored strategies for sudden high net worth individuals, emphasizing tax planning, asset protection, and long-term investment structures. The sudden appearance of large sums can be both a blessing and a burden, and experts are cautioning against impulsive spending or risky ventures in the initial phase. There is also a broader humanitarian angle to consider. If managed wisely, this revaluation could become a cornerstone in Iraq's development story, funding infrastructure projects, improving public services, and elevating the standard of living for millions. For the international community, a financially empowered Iraq could serve as a stabilizing force in the Middle East, capable of influencing regional dynamics through economic rather than military means. The road ahead will not be without challenges. Maintaining a high exchange rate requires disciplined fiscal policy, robust foreign currency reserves, and political stability. Any internal upheaval, regional conflict, or mismanagement could undermine the hard-won gains. But for now, the tone is one of celebration, resilience, and a renewed sense of possibility. From the dimly lit currency exchange rooms of Baghdad to the bright, bustling lobbies of New York and London banks, the world is watching as the Iraqi dinar steps into the global spotlight. The overnight surge past $6 is more than a number, it's a symbol of transformation, a rallying point for a nation, and a reminder to the global financial community that in currency markets, the most dramatic changes can happen in the blink of an eye. The next 72 hours will likely define how this moment is remembered, but one thing is certain, the Iraqi dinar has made history, and its story is only just beginning. Like and subscribe for more videos.